Welcome back to the sixth video of the futures series. And today we're going to look at real trading examples and chart analysis. And so the goal of this video is to show a few strategies and example of real trades I took. There is a few things I want to mention. First, I don't fully go through all the reasons I took the trade. There are obviously other factors and technical analysis that I go through before I take that trade. And the second is, even though it worked out this time, the setup might not work next time. So don't take this video as like a trading strategy and advice on how to win trades. There's a lot more back-end stuff that goes through with these trades. I mentioned some of these back-end stuff, but I'm not going to go through them and what they mean. So just want to point that out there. So the way this video is going to go is very, very simple. There's only three sides. I'm going to give you an example where I long the market, where I short the market, and then at the end, we're going to kind of just put it all together and things you should keep in mind when trading. So first, we're going to look at this example where I long the market. Before anything, I do want to mention a few things. So first, this is going to be the ES chart. Then the dark blue and the light blue is the exponentially moving average. And so the 21-day the 21-day EMA, which is the light blue, and 50-day EMA, which is the dark blue. And what they do is they help identify short-term trend shifts. What EMA does is it measures trend direction over a period of time. So in this case, 21 and 50 days. And so yeah, and then when the 21 EMA crosses below the 50, that's potential signal of a bearish momentum entering the market, or in this case, when it goes above, it signals potential bullish market. So there's the first tool, and then the second tool is the VWAP, which is the green line, and it tracks volume weighted average price, essentially kind of showing where the market's fair value is based on actual volume. And so standard deviation bands on VWAP are technical analysis tools that create price ranges around the volume weighted average price, VWAP, with one standard deviation representing approximately 68% of price data within the range, which is the light purple, and the second standard deviation encompassing about 95% of price data in a normal distribution, which is similar to Bollinger Bands. And when price moves far above VWAP into, let's say, 1 or 2 plus, standard deviation bands, it's considered overextended. So on the chart you're seeing, well, this is the ES. I've mentioned what this is. This is the futures that kind of follows the S&P 500 index and is in a clear uptrend on the 2000 tick chart. So this chart is a 2000 tick. It's literally what it's called. Every tick is like a tick. So there's a new candle every 2000 ticks. So when the stock moves 2000 times, like the price movement 2000 ticks, that's when a new candle opens. And so it's a 2000 tick chart. And so price had pulled back and started consolidating just above VWAP, right about here. Right about here. No, here. And so started consolidating. And we're sitting near 1 plus about here. And then a sign of bullish strength without being overextended. But the real signal came when, right here, when the 21 EMA, 21-day exponential moving average crossed back above the 50-day. And so this crossover kind of confirmed that momentum had shifted back to the upside, aligning with the trend. I also noted that the price had respected VWAP as a dynamic support, bouncing multiple times from that zone, which kind of shows that buyers were still defending the average price of the session. So here are a couple reasons I went long. One, the trend was intact and structure was making higher lows. The second one is price was above VWAP, which was suggesting potential bullish positioning. On top of that is the EMA crossover, which confirmed rising momentum. Then there was no major resistance directly above at that time. So like price had room to move. Usually when there's certain price points where there's much resistance, and usually when the futures hits that point, it doesn't necessarily keep going up. It sometimes hits that resistance, so it drops down. Yeah. And the main point is there were no major news in the market that could have shown a reversal, and resilience was positive. I'm not going to go over resilience because that is a whole other lesson that takes like a while to explain. That's the reason I took it. Oh, and another reason is hedge pressure. We were above hedge pressure and hedge pressure looked good. So that's also a signal that kind of incorporates options and expiration date, but we're not going to go over that. So I entered long shortly after the crossover with my stop loss just below the recent swing low near the VWAP and my target near the upper standard deviation band, or measured like leg extension. It was a couple points up. I think this was like a 10, like a 5 or 6 point trade. I don't remember. So this wasn't just a trade on one indicator. It's based on confluence, which is the VWAP acting as support, the EMA cross confirming direction, resilience, hedge pressure, news, and price structure supporting continuation. And when multiple signals link up like this, especially on a tick chart with strong flow, it gives confidence to step in. That is why I longed this trade. This next trade is an example of a short trade setup, and this was taken on NQ, which is the Nasdaq E-mini, using a 2000 tick chart. All of these are the same. And so in this case, price is clearly on a downward trend and failing to recover above key dynamic levels. So here, let's walk through what's happening. Oh, actually, before anything though, this disregards hedge pressure, resilience, market news, and more. So we're only going to mention VWAP and EMA. Obviously, hedge pressure and resilience was a big key to this trade as well, but I'm just not going to talk about that. So first, you'll notice VWAP, which is the green line, obviously, is trending above price. So it's up here above the actual price. Which yeah, so above current, so current market price is below VWAP, and this is like a clear sign that the market is trading under its session average, showing bearish pressure. Also, both 21 EMA and the 50 EMA are sloping down, with the 21 already below the 50, which confirming that like the short-term momentum is aligned with the overall trend. So after a strong breakdown move, price attempts a pullback, but it stalls under the 50 EMA and VWAP. Which is like a classic lower high and a great location to consider short. Seller stepped in as soon as price tested the dynamic resistance zone, and so the EMA and VWAP acted as a ceiling. And so once I saw price falling to break it back above, I entered as a short. So we could hear it broke through, hit a resistance point, went back up a little bit. That's why we could see EMA kind of closing in on that one. But then eventually we could see it used the resistance, dropped, and I sold off. I could have also caught this reversal because hedge pressure was just around here. It could have been another trade, but we're not going to talk about that one. So my stop loss went just above the VWAP and the recent highs from the pullback. My target was a continuation move down to the recent low, or until kind of like momentum slowed down. And this trade is a great example of a few things. One, letting the trend and VWAP positioning guide you. Two, using moving averages as a dynamic resistance. And then three, entering after a failed recovery instead of chasing the initial drop. So that's what we did here. We saw that it dropped down, but that didn't really signal off everything. Doesn't mean we have to short it now. We can see trying to pull back, resistance hit, and the stock dropped. So these kind of trades are powerful because they align structure, momentum, and price positioning. You're not fighting the trend. You're waiting for a pullback into weakness, then letting the sellers take over. So reading charts like a future trader. Like now that you've seen a couple examples of real trade, let's kind of like zoom out and talk about the mental process behind chart reading. So you should understand that successful future traders don't just react to indicators. They build context before making any decision. You may ask, well, how do they do that? Well, first they ask themselves one simple question. What is the market trying to do, and is it succeeding? That one question frames everything. It frames, is the market trying to break out? Is it trying to hold support? Is it exploring a new range or failing at the extremes? Now, that last question, is it exploring a new range or failing at the extremes, is especially important right now because right now is July 2025. And since the last few weeks, indexes are hitting record highs. So seeing this like new range or failing those ranges is very important. Obviously, because the ES will follow the S&P index. So if the S&P index hits a new high, then you will see this kind of in the futures, ES. So this is where auction theory starts to matter, and that is the idea that markets are consistently searching for fair value through price movement. And so if a breakout is falling, if a breakout is failing, for example, buyers push price above a range but can't hold it, that tells you initiative buyers are losing control and the other side may take over. And so from there, future traders start scanning for imbalances. These are clues that price and value are disconnected. So is the market trending or is it balancing? Are we rotating between high and low volume areas? Is price moving fast, so kind of like emotional, or slow, like a balanced movement? And so traders also often look at multiple time frames. They look at 2000 tick chart for execution, which is what I do, a 15-minute chart for structure, and then a daily or hourly chart, which just kind of helps them see key zones. And so this multi-frame view lets them avoid chasing noise. Another example, just because a candle breaks structure on a tick chart, it doesn't mean the trend is over. They can zoom out to see if that level even matters in the bigger picture. So sure, it could have looked weird on a 2000 tick chart, but that's just a 2000 tick chart, right? There are more candlesticks in a 30-minute period after the market opened, so like between 9:30 to 10 in a 2000 tick chart. But that same 30-minute period, you could have way less candles after the market closes because there's less movement. A key tool at this level is also trap detection. Are we seeing fake breakouts with low fall through? Are traders getting long into resistance or short into support? Spotting these traps can help you enter when others are getting out. When others are getting stopped out. It's where the best traders often happen. Indicators like VWAP, EMA, Bollinger Bands, these are helpful, but they're supporting actors and they're most effective when they agree with what price is already telling you. A good future trader doesn't say this indicator says buy. Like you're not going to look at the EMA and say, oh, 21-day moving average went above the 50, let's buy. Or I guess let's long. No, you don't say that. What they do say is they look at price action, structure, and tool alignment, which kind of gives you a controlled risk setup. And finally, you can kind of look context over signal. No matter what your strategy is, the question is always, is the setup forming in the right place, at the right time, and in the right environment? And you may ask, well, what does environment mean? Well, it includes more than just a chart. It also means being aware of news events, economic data, and even Fed speakers. Future markets, especially the index features like the ES or NQ, which we're looking at, react heavily to headlines, right? A strong job report can spike volatility. Fed commentary can reverse a trend instantly, or scheduled events like CPI, FOMC, or PMI often set the tone for the entire session. These news come out usually around 10 a.m. So as they come out, they kind of set the tone of the entire market and how it would move. So before taking a trade, smart future traders ask, am I placing this trade right before a news event? Could this breakout be a head fake caused by low volume ahead of data? Being blind to the news can make even a technically perfect setup fail. But when you're aware of both technical and the fundamental context, you're playing the game with both eyes open, sorry. And that's when the edge really shows up. That's how like you read charts like a pro, not just reacting to what's on the screen, but thinking one step ahead, building a story around price and only acting when everything aligns. I hope this video helped you see more examples and how futures play out and all the background stuff a trader should be aware of. There will be 3 more lessons in this series, the next one being types of trade and execution. These next 3 lessons are going to be more technical and more like for people who are trying to trade. So I hope you stay tuned for those and enjoy them. Thank you so much.